How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 23 to the Asian Session Library. On Monday, the 8th, January 2024, we had a successful Asian Session model. Let's walk through it together. As always, this model is very simplistic. It allows us to trade the Asian Session. It is simply a turtle soup. We're looking for a purge and revert to opposite side of liquidity. So we don't trade 12 p.m. to 8 p.m. As we know, this time period is a dead zone. You're most likely going to face a phase of consolidation, and all markets start in the consolidation. 8 p.m. to 12 a.m., that's when we're going to trade. This is our live session. This is our dead session. We're going to be looking for the buy side liquidity, which is going to be resting above the swing highs. So as you can see here, that is the only one we have available in this session. We're looking for the ones that are unbroken. We want to take the ones that are fresh and not have already been purged going into Asian session. So here we don't have a swing low. So we're going to be taking the very lowest low we have right at 8:15 because this is the 15-minute time frame. 8:15 candle closes. So that's the low we're going to be using. As price goes in, we can see that retail traders come into the market because we know they start the market and they're going to most likely chase this price action going down, break, retest, and looking to go short. Odds are it doesn't go short. At this point, I would scale down to the 1 minute time frame as always. We would scale down. And what we're looking for is that fair value gap that breaks a swing high. So let's play it through until we get to that entry technique. And there we are. So we got that fair value gap that breaks a swing high. And it even breaks multiple swing highs too as well. So we got one there. And we got that very first one down there as well. So this is the entry technique. It's not very hard to spot. It's a very simple one. It's the same one we've been showing for all the episodes. So there's no excuse. I hope my directions are pretty clear. At this point, what I would do is I would look for a long position, looking for a one-to-one scenario. As always, I'm risking 15 pips to gain 15 pips. You could do what you want and your desired risk. Most likely, you should be risking 1% or 0.5%. If you're a little more aggressive, you'll be risking 2% per trade or 3% per trade, and then you'll go from there. And this is how I would use the Asian session model for US dollar versus Japanese yen. And as we play it out, price taxes in. You can see we do fall into some drawdown here. And notice we are below the Asian session open. Going into Ipto Trude, so this is after the Asian session, the market gives us 15 pips there. So at times, it doesn't happen inside the Asian session, as we know with many of the examples we watched. But we can see how it still provided that entry technique for us to get that profitable 15 pip TP here. And then some, if we were to play it forward, let's go back onto the 15-minute time frame. We know our stop loss is down there at 143.474. And if we play it through, you can see how price gets back to that 15-minute swing high that we had marked off in the dead zone. And as we play out the rest of the week as well, we can see we get more than just 15 pips or more than just 1% based on that trade. Now, of course, that might be unrealized gains depending on how you trail your stop loss. Sometimes it's inevitable you're going to get stopped out. But if you happen to not had moved your stop loss, this would have been way more than 15 pips. As you can see, the market continues trending higher. You just jump on the 30-minute just to make it more, or even jump on the hourly just to show how much more further this trade goes to the rest of the week. So we can see from that level down there, we were just risking 15 pips, and the unrealized gains was pretty high, honestly. That's over, we'll say, from here to here. Man, we're talking pips, man. So hopefully this was insightful. Once again, we haven't changed the pair for this playlist at all. Before you traders go, I wanted to leave you guys off with the Google Sheets link to the Asian session model tracking for 2024. I'm going to be tracking it day by day, month by month, so I'm able to optimize and see the actual results of this model. So if you take a brief look, you can see I have the theory, the concept, the entry technique, as you guys know, some generic stop loss techniques as well. You guys know I use a 15 pip SL for my entry, some risk management, either zero point 0.5 to 2% per trade, but that all depends on your risk appetite and your equity. So you could be the deciding factor on that. And as you can see, this is the tracking here for January thus far. I have the pairs, I could change it. You have the day a week, the entry, the stop loss, the TPs, starting off with a very minimal target of 10 pips, ideally 15, and then some to 40. Here, if you see the asterisk, that means that the trade did not hit stop loss, and this is unrealized gain. So it's still beyond 40 pips and pushing. At the end of the month, we'll calculate what the unrealized gain of that trade will be just to get a fun, interesting number on it. And if it already hit a TP and then hit stop loss, I put the max amount that it did before hitting the stop loss. So 10, 25, asterisk means that it's still in profit technically, unrealized gains. So we'll calculate that. This one hit stop loss on Tuesday, as you can see. And then we got Wednesday, max was 20. And then here last Thursday, the max was 48 before hitting stop loss. So hopefully you find this interesting. Hopefully you find this useful. Peace.